In this video, I want to go over a mistake that I made many times when I first started investing, and hopefully I can dissuade as many of you as possible not to make this mistake during this next intermediate cycle, just on the chance that this could turn into a parabolic blow-off bubble top. So the mistake, of course, is trying to trade in and out of the market during a parabolic phase. I think I can say with about 100% conviction that no one is going to do it successfully. Let's go to the charts here, and let me show you what happened during the 2000 bubble, and then keep in mind that our current market is even more volatile than what happened in '99. So we may, if this does turn into a bubble, it may be even more extreme than what happened in 2000, which makes sense as central banks have printed an unimaginable amount of currency units over the last 8 or 9 years. So anyway, let's go to the charts here. So here's what I'm already seeing, and this is the mistake that I made invariably. Anytime I got into a strong trending move early in my career, the tendency is that I was afraid to give back any of my profits, and so I was always too quick to take to sell, to take my profits, and then when the market didn't give me an immediate pullback, I was in the unenvious position of having to then decide, well, do I buy higher and just accept that I've screwed up and I've missed a chunk of the rally, or do I keep waiting and hoping that I get that pullback to buy into? And if it never comes, then I just risk missing possibly most or all of a bubble phase, because they can happen pretty quickly. So here is this was the blast off for the parabolic phase of the tech bubble in late '99 and into 2000. This was a daily cycle low. And so, I'm already seeing people making plans to attempt to dodge the next daily cycle low. That would be great if it's possible to actually time that daily cycle low. I've noted this before, that during a bubble, cycles don't work very good, if at all. So here was our daily cycle coming out of this cycle low right here. This is where the parabolic vertical phase began. And from this daily cycle low to this ended up being the top of the daily cycle. This was 52 days, which is, as most of you know, much, much longer than a normal daily cycle. One could have, exited the market way back here in anticipation of a daily cycle low, and then potentially missed an entire month of almost vertical gains because they were anticipating a normal daily cycle, and we just didn't get it. As a matter of fact, this one day was the only day during this 2.5 month period where the market even closed below the 10-day moving average. And so, another technical signal that works quite well in a normal market, but during a very strong trend just completely fails, doesn't work at all, is looking for periods where the market gets a little too stretched above the 10-day moving average. Most of the time you can can almost bet the farm that that's going to produce either some sideways consolidation and allow the moving average some time to catch up, or we'll get a pullback to that 10-day moving average, and that would be your chance to re-enter again. So here's a good example right here. A nice strong rally off of this tag of the 10-day moving average. That was the signal that things were getting a little overheated, and the market needed to pull back a little bit, which it did. And like I said, during a more normal type market, you can just almost always bet the farm that this kind of stuff is going to occur. But if we get into a bubble phase, you can see right here we gapped out to all new highs right here, and then it just didn't matter whether the market got stretched above the 10-day moving average or not. It just never slowed the market down. This was because the unsophisticated retail investors were starting to trigger a buying panic, and there just weren't really any pullbacks. And and it just from glancing at this, you can't really tell, but this is a 61% move in 2.5 months. And I've gone over this as well. And this applies just to the advancing phase of an intermediate cycle. Markets can stay overbought for a long period of time during the advancing phase. During a bubble, they can stay hideously overbought for a month or more. So this is just not really a usable tool to try and calculate when you should sell your position and try to get back in. Basically, the lesson of old turkey applies in spades if we get into a parabolic blow off top. You're just not going to be able to time wiggles during a parabolic move. All you will do is succeed in missing big chunks of the rally. So now let's move over to our current market. And while this was a very aggressive vertical market, you can see once we broke out above these all-time highs here, the rallies were very aggressive, pullbacks were very minimal. Trying to time these tops and these bottoms, you just weren't going to do it. We took our initial quest position right here. It was on the 2nd of October, I believe. And I can guarantee you, anyone that tried to trade in and out of that quest position has vastly underperformed our simple buy and hold strategy, even though we had to weather a very significant pullback. In fact, the pullback came down to the point where it almost retraced back to our entry. But this recovery was the third quickest recovery back to new all-time highs in history. So it wasn't long before we're right back here making new highs. And as you'll notice, this is very similar to how the parabolic phase began in '99. We have gapped through to new highs. So there is risk that this is a breakaway gap, and this gap is not going to fill. So I'm going to just caution traders. We've got a very prominent target at 10,000. The first part of this rally went halfway there. The second part of the rally will almost certainly make it either to 10,000 or very close to it. So we've got, you know, if you don't mess with this at all, if you treat it just like we treated the Quest, and you don't mess with it at all, don't worry about wiggles. Um, we've got some very nice gains in our TQQ position from where we're at right now. We've got almost 2,500 points to go. So in percentage terms, that's about 33%. As I showed you during the last bubble, uh, in 2.5 months, the NASDAQ tacked on 61%. Well, we've got a magnet pulling the market higher at 10,000. That's going to give us 33%. You multiply that times 3 for TQQ. And then also these triple leverage funds do deliver a little bit of outperformance when the market is trending strongly in the correct direction. So it might be that we end up more like multiplying it by 4 instead of 3. So we potentially have somewhere between 100 and 120% gain potential in our TQQQ position between here and 10,000. And as I've shown you, it's not inconceivable that we could do that very quickly in 2 to 3 months. But if you get sidetracked into trying to dodge wiggles, and you know, you're basically, most investors are just they're trying to avoid drawdowns, and in the process of trying to avoid drawdowns, they may cut their potential profit from 100 to 120% to possibly down to 50% or lower, depending on how many screw ups they accomplish, and how many chunks of the move from here to 10,000 they miss. In a perfect world, we would traders would be able to anticipate the exact top of every leg up, and then they would also be able to anticipate exactly when to re-enter. But of course, no one does that successfully. And I think I showed, with the chart of the 99 market that no one was even going to come vaguely close to outperforming, a simple old turkey strategy during a parabolic phase. So I'm going to strongly suggest traders, don't make the same mistakes that I made when I was a novice and an intermediate investor. There is, a reasonable possibility that this could turn into a final parabolic phase, into a bubble, and if it does, you are not going to be able to outperform by trying to dodge meaningless corrections that as we saw during 99, only one of them even managed to close below the 10-day moving average for one day. And as I said, this, already coming out of this yearly cycle low, the market is much more volatile than the 99 parabolic move. So, there's a very good chance. And as I showed, that daily cycle lasted 52 days. It's completely conceivable that we are not going to have normal duration daily cycles during this intermediate rally. This cycle could stretch for 50, 60, 70 days before giving us any kind of correction. And if you're anticipating a cycle top on day 25 or day 30, then you could miss an entire second half of a bubble, and that would cost you dearly. These kind of opportunities don't come around very often. So I can tell you, for the stock portfolio, I am not going to make any attempt whatsoever to sidestep a first daily cycle simply because I have no idea when it's going to come. I have no idea whether it would even drop below the 10-day moving average. Um, and if it does, I may not, may not even push the 5-day RSI to oversold. You can see this daily cycle here didn't even completely get oversold. Neither did this one. Uh, this cycle, I guess you could maybe call this a cycle low. Bailey basically amounted to 1 day below the 10-day moving average. So I don't think we're going to be able to um, time a daily cycle low. May not happen in a normal timing band, and whenever it does happen, it may be shallower than what we expect. So I am not going to make the mistake that I made early in my career during what has the potential to possibly be another vertical bubble, parabolic bubble phase before this 4-year cycle tops. And if we do get a parabolic phase over the next 3 months, then we would have a very strong possibility that that would mark the top of this 4-year cycle. So we'll just have to see how things play out and how this rally progresses. But as of Friday, this was a um, very encouraging sign. The gap out to new highs, very similar to how the parabolic phase began in '99. And I just don't think it's something we want to take chances with and potentially miss big chunks of the rally because we got worried about um, losing a little bit of profit on a meaningless pullback that may not last more than 1 or 2 days.